Hello, learners. Welcome to our session today, a continuation of what you were doing earlier on. In our session, I want us to look at question number 22 in our revision, and that basically is a concept to do with management accounting. So I want us to go through this question and see what we will be requested to do. So going through the question, which was from our revision, these are what you are asked. My name is CP Aringo Frederick, for those probably whom you're listening Walimu for the first time. So these are what you're told, that you're the management accountant in a manufacturing firm. Your CFO has requested you to prepare the profit and loss for the product mDarasa for the month of February 2023. Given the following data, I'm having the product units sold, price per unit, variable cost per unit. I'm having fixed cost. They are also given like part B. Based on different market dynamics, your CFO will also wish to analyze the profit of the firm and a different level of output based on the maximum production that the company can produce and sell product mDarasa. So the following scenarios are provided for your analysis. So here is what you're told, like prepare detailed outcomes under the scenario given above on the following: sales revenue, total variable cost, contribution, fixed cost, profit, and total cost. Great. Then part C of the question, these are what you are told. There is a proposal of introducing a new product, Make Connect. There is a proposal of introducing a new product branded Make Connect with the aim of diversifying the company's operations. This product is estimated to retail at a price of 450 per unit with a variable cost of 350 shillings per unit and a fixed cost of 400,000. Required, using the following information, prepare the break-even point chart clearly showing the BP in units and in value for product Make Connect. Part 2 of the question, we also asked what level of production should the firm attain to achieve a target profit of 1 million for product Make Connect. So my good students, when you're given such a question, you should always tend to smile. So in this context, in this case, allow us to start with the first question, which is part A of the question, where we are supposed to prepare basically the profit and loss for product mDarasa. So literally, these are what you're going to do. We can do this on the other sheet for the purpose of us understanding the concept clearly. Let me copy paste this in a different sheet so that you work it out there. Literally, you can just have it here actually. Let us have it here. So we just copy paste it. Part A, first of all, I'll open a new sheet here. So this is the data that I'm given. This is the data that we're given. Part A, we are solving part A first of all. So let's start by solving part A of the question, right? So the whole idea, the examiner here wants us to prepare an income statement. So I'll be having mDarasa. These are product mDarasa. Product mDarasa income statement. Product mDarasa income statement. So these are what you're having. Of course, I'm given, I'll just take the way I'm given exactly these bits here. So literally, I'm going to have talk about our total revenue. So total sales / revenue. I'm going to have, of course, that times selling price per unit. Give us a figure of 30,000, 300,000 that I'm getting. So this I can basically lock that so that I get my total variable cost here. Total variable costs, my total variable cost at this point. I'll basically just come and drag it there. Because that will take, of course, our units. That is literally our units, number of units times variable cost. So that I'm having our contribution to this point. Our contribution, I'll be having a contribution being that minus that to give us 100,000. Talk about our fixed costs. So my fixed costs here, I'm given the figure that I was given there of 100,000, right? Our fixed cost, I'm given here 100,000. So what will be our total? What will be our total? Or rather our profit here. A profit having a contribution of 100,000 and a fixed cost of 100,000. So that is to say basically that our total here will be, our profit will be equal to 0. Is that the case? So my profit here literally will be equal to 0. The reason is, of course, you can see our contribution minus fixed cost will give us 0, So what about our total cost? My total cost is basically our variable cost and our fixed cost. So my total cost is 300,000. So that is the first thing that you are required to do according to this question of hours here. You see this question of hours here? Literally, that is what you are required to do. Yeah? So we have prepared our income statement. So the next thing that you are supposed to do, these are what you're told. Based on different market dynamics, your CFO will also wish to analyze the profit of the firm and a different level of output based on the maximum production the company can produce and sell product mDarasa. So what you're going to do, let me do it this so that it will be much easier on our end. Okay, so we are done with the part 1 of the question. So part 2, based on different market dynamics, your CFO will also wish to analyze the profit of the firm and a different level of output based on the maximum production the company can produce and sell product mDarasa. So the following scenarios are given. So these are scenarios that you're given. So you're told prepare the detailed outcomes under the scenario given above on the following. That is, of course, sales revenue, total variable contribution. So literally, I'll be having all these details. I'll be having all these details here. I'll be having all the details here. All the details, I'm going to have them here. So literally, what the examiner wants us to basically prepare in this question of ours is to simply for us to prepare these are scenario analysis given different concepts, or rather given different variables. How will we achieve our results? How will you achieve a given results? How will you achieve a given results? So this will be easy. My good students, this will be easy. And why is Mwalimu saying that this will be easy? Because look at it, in this case, you're told to, these are the scenarios given, right? These are the scenarios given, production units. So these are the scenarios given, production units, these are scenarios given. Production in units. So remember, all this question, part B, is basically relating with part A directly. So this one is basically relating with part A directly. This was our original detail. And so here the examiner has given us different scenarios that we need to prepare our profit. So I'll come and take these scenarios that I'm given. So at this point, you're going to apply one variable data table, if you can recall. Basically one variable data table, variable data table. So basically, I'm going to have our different scenarios there. Then on one-way data table, I must use our original data, which in this case, our original data is what we had here, like our sales revenue, total that we have determined, our total variable cost, total that we have determined, our contribution here, total that we have determined, our fees cost here, total that I'm having, then our profit here, of course, is a total that we have determined, as well as our total cost, that is what you're having. All this must be linked to the original data. All this must be linked to the original data. All this must be linked to the original data. So once we have this in mind, you'll find that our task now will be simple. You want to prepare all this in different scenarios. So that will be simple. What you're going to do, I'm going to highlight the details that I want to prepare my data on. Then recall the aspect of data. So basically, I'll come to data. Then in that case, of course, I'll come to what if analysis. I want data table. This time around, we want to basically use one variable to give us the results. And in our case here, we've said that we want different scenarios which are production units. So therefore, I'm going to use what? The level of production, and I'm going to select the original, which was what? 5,000, where our data was linked, where our data was literally linked, because the whole of this data is linked to the 5,000, right? So I'm just going to do okay. I'm going to our results. I'm going to our results at different scenarios. At different scenarios, basically, this now will be our results. That is sales revenue, total variable cost, contribution, fixed cost, profit, total cost. At different scenarios, at this different level of output, this will be our results. And sales revenue, total variable cost, contribution, fixed cost, profit, total cost. Recall the class of data table that Mwalimu handled with us the other time. You'll find that the whole of this data we mentioned that it should always, whichever results that I'm having, it should always be linked to the first. It should always be linked to the original data. And if you can recall, our original data, this was our original data here, which if you can see, for us to achieve our total sales, it has been linked to the original data. For us to achieve our total variable cost, it has been linked to the original data. By the virtue that we're determining our contribution, we find that it has been linked to the 5,000, and somehow fees cost to remain constant, that won't be affected. Whereas the total cost, it has been linked to the variable cost, which the variable cost is also linked to what? The variable cost is also linked to our original data, which was 5,000 units. So literally, these are what you're expected to do. These are what you're expected to do, and this is our results. This is our results. This is our results. So we are done with the part 1 and part 2 of the question. So come to part C of the question. These are what you are told. that there is a proposal of introducing a new product branded Make Connect with the aim of diversifying the company operations. This product is estimated to retail at a price of 450 with a variable cost of 350 per unit and a fixed cost of 400,000, right? So these are basically what we are told. Then in addition to that, we are told that using the above information, prepare the break-even point chart clearly showing the break-even point in units and in value for product May Connect. What level of production the firm attain to achieve the target profit of basically 1,000 for product May Connect. So a good examiner wants us to prepare a break-even chart, right? So these are whole different products. So let me have this question here. These are whole new different products. So what are we supposed to do? In this case, we have to prepare our chart, and of course, you have to come up with a various range, right? So basically, we can determine, first of all, these are solution. So let us see, what will be our break-even point? Break-even point, if you can recall what Mwalimu taught us, that break-even point will always determine a break-even point by basically taking our fixed cost over contribution margin. That is what will give us a break-even point, right? Break-even point is literally our fixed costs divided by contribution margin, okay? Where our contribution margin is simply our CM here. Our CM is simply our selling price per unit minus variable cost per unit. That will give us our contribution margin. So based on this question, even before we go to the chart, I think we can achieve our break-even point, right? So break-even point, this will give us our range. So contribution margin to start with, I should be having, of course, our selling price, which is 450, minus variable cost, which is 350. So literally that is to say our contribution margin should be 100. So my BEP, break-even point, should therefore be how much? Break-even point should therefore be 1 million. Not 1 million, but we told our fixed cost was a fixed cost of 400,000. Fixed cost of 400,000. And our contribution margin, which is 100. So therefore, that is to say our break-even point is that one divided by that. So our break-even point is 4,000. So literally, if our break-even point is 1,000 and I need to come up with our chart, so therefore, let us prepare these variables. Let us prepare these variables. I'll be having our production here. I'll be having our production at this point, okay? Having our production, I'm seeing our break-even point is 4,000. So literally, you can prepare our chart to have a range of what? A range of 1,000. 1,000 will work. These are production units. So basically, you can prepare a chart over a range of 1,000. So I'm having 1,000, 2,000, 3,000, 4,000, 5,000, 3 top, 3 down, right? 5,000, 6,000, 7,000. You can go 8,000. You can go up to 10,000, 9,000, 10,000. So literally that is our range. That is production units. The other item here, we do have our basically total sales. Total sales slash revenue. Total variable cost contribution. And have our total cost, or rather fixed cost here. We can have our profit, or our total cost. Then you can have our profit here. So basically, these are what we have. So our variable cost, and so I'm having here variable cost per unit, you're given 350. Selling price per unit, you're given 150. As per the details that I was given here, right? As per the details that I was given here. So once we have that, this will be easy, because the next step will be for us to basically determine our total sales I should be having. Therefore, our selling price here times the number of units. So basically what I can do, I can simply lock that. Click F4 to lock. So we scroll it down. This was 10,000. Total variable cost. I'm having variable cost per unit and the number of units there. So basically we lock this one as well. So that I scroll it down to give us the results. Total contribution, basically we should be having a total contribution by simply taking our selling price, or rather sales minus variable cost, which literally should give us our value there, total contribution. Fixed cost, you're told that we had a fixed cost of how much? Fixed cost was 400,000, right? Fixed cost here was 400,000. Recall the 400,000 that you're given. So my fixed cost will be 400,000, which will be constant all through. So therefore, this will be constant all through. Our total cost, basically, fixed cost plus variable cost should give us our total cost. So our profit, either way, you can either take your contribution minus fixed costs, or you can take your aspect of total sales minus total cost. So Mwalimu is saying that our profit, we can basically take our contribution minus our fixed costs. We should be having it at that point. Or you can simply take, these are basically just for confirmation so that you understand what Mwalimu is saying. Or you can simply take your total sales minus total cost. You'll find that it will give us the same. Right? You see, it's giving us the same values. So once we have this data of ours, you can see that we are achieving our break-even point here at a level of production of 4,000, which you had clearly seen it earlier on. So that's where we are achieving our break-even point. So preparing our chart, this will be easy. I can come here. We can come simply and take our production and our sales revenue, right? Control, I pick our fees cost and total cost, so that I want to insert our chart. So inserting our chart, we just come to insert. Then I know it is basically line chart. So I'll come to this scatter. So for scatter, let us see what will fit well. Scatter with smooth lines. That one is straightforward. So you can take any, This time around, maybe, yeah, we can take that, assuming I've taken this one, or can take either. So basically, these are what you're having. These are what you're having as a chart. These are what you're having as a chart. So basically, having our chart, let us format our chart. So our chart, basically, we're having, this is a break-even chart. Break-even chart. This is for product make connect. Break-even chart. Then, of course, what you can do is we can format our legend and take them on top. Then maybe you can add our axis just below here. So just a moment, I come to my design, add element on chart, axis title. You can have axis title. This was the number of units, right? So basically, I can have our units here. These are our units. Then these are our values here. So basically, design, axis title. So what I can do on that, I can just do equal sign. Then I come and take that, make our work easier, right? So literally, this is now what you're having. These are now what you're having as our chart. So that in this case, if at all we are to determine our break-even point, you see where our total cost is basically meeting our total revenue. It is at what point? This is a point where our total cost is meeting. You see that point, 4,000 units, as we had determined it. This is a point whereby our total revenue is meeting our total cost. And it is a point whereby I'm having our units production 4,000. Therefore, our break-even point in value is 1.8. So literally here we can agree and say that break-even point in units, and you can talk of break-even point in values. In value, okay? So in units, we're having 4,000, whereas in value, you can clearly see it's giving us what? It's giving us let us see, add label. It's giving us 4,000. So basically, I'm having 4,000 and 1.8. So that is a point whereby I'm having a break-even point. So break-even point in units, that is 4,000, and break-even point in value, 1.8. You see how simple it is to come up with a chart. You can also come and have your own design if you want. Just making your work to be kind of attractive. So yeah, you can go with either. So these are what you're having. These are what you're having here. This is what you're having. So in this case, we have prepared our break-even point. We have prepared our break-even point. We have prepared our break-even point. We have prepared our break-even point chart. Okay, so in that case, my good students, and the next item that maybe will also be required to prepare is what? The next item that will also be required to prepare, according to our question, you are told, what level of production should the farm what level of production should the farm attain to achieve? What level of production should the farm attain to achieve the target profit of 1,000 for product may connect? So basically, that is what level of production should we produce, or rather should we sell? What level of production should the farm sell, or rather sales units, to achieve this case? So to achieve the target sales in units, to achieve target sales in units, always recall this, to achieve our target sales in units, always recall this. We'll always be talking of our fixed cost plus the target profit that you're having, we divide by contribution margin. This will literally give us the target profit that the target level of production that we should be having. So like in our case here, we need to achieve 1 million, right? So therefore, I'll be having my fixed cost, which is 400,000, plus my target of 1 million profit. I divide by contribution margin of 100. Recall, we had already determined contribution margin. We had already determined our contribution margin here. This was our contribution margin. So basically that would be easy and simple. So therefore, what I'm going to have, this should give us 1.4. So for us to achieve a target profit of 1 million, therefore the farm should produce 14,000 units. The farm should produce 14,000 units. The farm should produce 14,000 units. For us to achieve the target profit of 1 million, the farm should produce 14,000 units. The farm should produce 14,000 units. Let us see, assuming like we add these elements of ours here. So it's just a matter of confirmation. So basically we're having plus 1,000 incremental 14,000. I just want us to see what we'll achieve. And we're having this, right? So for us to achieve this 1 million, as you can clearly see, the formula has given us. Therefore, we ought to have sell 14,000 units, right? Yeah, so basically that is what you're supposed to do in this question of ours. You can see it just a flow of things. So long as you grasp one item, all the other things will just be flowing. So to that point, guys, we can meet in our next class, whereby we are going to handle probably the other part of the question which has remained. Basically, that will be question number 23. We handle question number 23 in our next session. To that point, thank you so much, and let us meet in the next session. Thank you, guys.